Most, people that come to us, they've had a quote unquote advisor who just turned out to be a money manager. And they didn't advise them on when to pay taxes, when they should do conversions, that their Social Security could be taxed up to 85%. There's a lot of missing pieces that people don't realize.
And welcome into the program. This is Protect and Grow Chicagoland Retirement with Chicagoland's certified financial planning professional, Tim Stearns, CFP, giving us proactive advice, guidance, insights, and strategies on how to protect and grow your money, ladies and gentlemen. And Tim, one of the big ways that we can do that is by controlling taxes. It's that time of year. I think taxes are starting to be on everyone's mind as our big beginning of the year to do item.
Right. And I know even our like CPA already is been cranking out different people returns that have already gotten them their stuff. So yeah, definitely. And I think that with Trump coming back into the office, there's going to be a lot of things going on. The first thing that he's talked about is he wants to fix the border, but the second thing I've been hearing on every pundit that I can listen to is that they want to also fix the tax bill so that it doesn't expire at the end of this year, which, right now we like to tell our clients, income tax rates are artificially low.
Yeah.
They're the lowest they've been since the early 80s. Oh, and a lot of baby boomers were just getting started. So when we tell people, hey, maybe it's time to look at that Roth conversion, and with Trump coming back in, if they extend it, that could be really good for a lot of people.
Well, ladies and gentlemen, if you need help, if you want to be proactive with your money, your investments, that certainly involves taxes. That'll be the topic and the talk of the program today. But you've got a resource there with Tim Stearns, CFP, and the team from TJ Stearns Inc. And all you need to do to get a conversation started, to be proactive, and to make sure that you are reviewing, evaluating, and assessing the progress that you're making financially into, toward, or through retirement. Pick up the phone and give a call, 800-640-2256. That's 800-640-2256, 800-640-2256. And Tim, you and the team there from TJ Stearns Inc., you understand that taxes are a big bill. We've talked about the fact probably one of our largest known expenses in retirement. The act of filing those taxes can be arduous, frustrating, difficult,
Yep.
can result in owing a lot of money. Sometimes we get a little money back. That can be good if things go according to plan. But you all, and here's, I guess, the important distinction of the program today. You're not looking back as much at last year. I mean, maybe for reference, but you're looking toward future years in trying to help people manage future tax liabilities and bring those down as much as possible.
Well, one of the things I bring up in my class is, people are always Monday morning quarterbacking themselves for last year. You're playing, I always say, what are you doing on April 15th? You're filing your taxes and you're playing shoulda, coulda, woulda. And what we're talking about with people is how about looking down the barrel at what's ahead of for you in your retirement? So we are talking about people about being proactive with their taxes rather than being reactive.
Another sports analogy, maybe not on the scale of being well known like the Monday morning quarterback. But Tim, I used to tell my baseball teams that champions hardly focus on the last fight or the last game, whether they won or lost. Yes, they use it as motivation, but winners and champions focus on the next game, the game ahead, and how to get better into future competition. And tax is almost the same here. Tax planning, very different than tax preparation or tax filing. Both are important, but for long-term victory, for long-term efficiency, both are necessary, but we've got to focus ahead rather than thinking, well, we're just mitigated and relegated to taxes being what they are going to be.
Right. And, to quote another great Wayne Gretzky, he always talks about you skate to where the puck is going to be. Well, where are your taxes going to be? So yes, last year is last year. If you're a prospect out there and you want to give us a call and get some tax planning done the correct way, where you're looking ahead instead of behind you, then give us a call.
Yep. 800-640-2256. 800-640-2256 is the number to call. Tim Stearns, CFP, and TJ Stearns Inc. Tim, more kind of sayings here. History repeats itself, or at least if we don't learn from history, we're doomed to repeat it.
Yep.
Another saying suggests that history does not repeat, but often rhymes. And certainly the act or the requirement of filing taxes every year seems to be fairly repetitive. And additionally, if we don't plan ahead, so too can the pain that is inflicted from owing and paying too much in taxes. That gets pretty repetitive pretty quick.
Well, I mean, if you know that you can fix a situation, why would you not do it? So again, being proactive with taxes is important. If not for yourself, at least for your heirs, if you don't use up all your money in your IRAs, they will be stuck with the tax bill. And who wants to give the IRS more than their fair share?
Yeah.
So what we do with people is that we will run uh, a tax bill analyzer to show people that what your qualified money is worth to the IRS today versus if you do something proactive, for the future. And it's eye-opening.
Yeah.
I think it's staggering to most people when they finally see it and they realize, wow, I don't want to do that. How do I start to nibble on that tax bill?
And there's a high level base retirement tax bill calculator, do it yourself tool online.
Yep.
Tim, you've made that available at mvpcfp.com.
Yes.
MVP like most valuable player, CFP like certified financial planner, mvpcfp.com. Ladies and gentlemen, that's your resource online to run the high level retirement tax bill calculator. Now, to get into the strategies for how to control and minimize that tax bill, that's where you want to consult your professional team, your certified financial planning professional, your certified public accounting professional, your CPA, your accountant, your financial advisor. Tim Stern certainly here as a resource for that. But that online tool, that retirement tax bill calculator, Tim, as you said, eye-opening. You've made mention of this before, and it's struck me as probably being even more accurate than you make it out to be. But like, if you ask somebody how much they have in retirement, they could probably tell you with a very, very slim margin of error. But if you ask somebody, how much are you going to pay in taxes on that account? It's like we're clueless.
Well, yeah, or you could say a deer in headlights, you ask them that. I mean, there's no one knows that. And, we can do right now is we can actually run that report to show them that. And again, it's at www.mvpcfp.com. And all we need is some information from you, and we'll email you the report. And the information is free to those out there that want to give us a call. With the other thing that I'd like to give out is also our book, Solving the Modern Retirement Riddle, because we go over Roth conversions, that type of thing in the book. So the first 10 callers out there with $1 million or more, give us a call. We'll get the book into your hands, and then we can also run that report for you.
Solving the Modern Retirement Riddle. It's an excellent book, breaks complex problems that we have in retirement down to relatively simple issues and solutions. So if you'd like a copy of that, just be one of those first 10 callers. Ladies and gentlemen, 800-640-2256, 800-640-2256. And again, the retirement tax bill calculator, that's available online for anyone to do on your own time, see your own numbers and in your specifics in your scenario. So mvpcfp.com, mvpcfp.com. Now, Tim, the big question and really the premise with how we have saved for retirement. But the question I have, is it true? Is it accurate? The idea that taxes will be lower in retirement, that taxes somehow are going to be reduced once we reach retirement. Are you seeing that is true? Like, I have yet to find that in the tax code.
That is not in the tax code. I think that's almost a wives' tale nowadays. Everyone, I ask people in our class and our workshops, do you think taxes are going up? Yes. And then I say to them, what is the biggest fallacy you hear about retirement? That you'll be in a lower tax bracket because taxes are going up. It's not like the utilities your water bill company, your gas bill, they call you and say, "We heard you retired, so you're going to get a third off now." I mean, everything kind of stays the same. And inflation, is another nail biter for most people that are retired. You're seeing a lot of people being priced out of their house because of property taxes and that type of thing. So with that, we are trying to help people plan and get ahead of it by having not, already converted money or non-qualified money so that they've paid their taxes and they know exactly what the assets that they have are.
Tim, do we think taxes could be higher into the future, almost counter to the premise under which we've saved?
Well, here's a secret, Peter, that I know about is that there's a federal deficit out there. I'm being facetious. Everyone knows that. Well, how do you get out of a deficit, right? You're going to cut spending or you're going to raise taxes. And what do you think Congress will do? I would think that they're probably going to raise taxes. And, we're going to be left holding the bag.
So, Tim, what what factors go into managing taxes in retirement? Do you find that managing taxes in retirement is more difficult than managing taxes during our working career?
Well, when most people are working for a corporation, the taxes are taken out. By the time you get your money, it's actually your money. Now, here, you start taking out chunks of money to live on. Do you need to start doing estimates to the IRS? Do you need to do that or do you not need to do that? When you start pulling down Social Security, how much of that is being taxed? These are the things that go into our income allocation plans. We call it the Protect and Grow Blueprint. And by doing that, we can show people exactly here's where your tax bill is. This is the money that you're going to receive when it's all said and done.
The first couple years of retirement, Tim, is the situation with taxes kind of figuring it out? Like we talked about the fact that filing for taxes is sort of history repeating itself each
Right.
year. Does it suddenly get new and different the year after we retire?
I think it does for most people. Again, they're not used to doing that. Paying taxes when you're working are pretty straightforward. Once you get into retirement, it's kind of on you, and I've had people that want to do their own taxes and they get a fine or they get a penalty because they didn't pay the amount that they should have. That's why I say to people, you should have, do your own math, but have a CPA like our CPA Joe checks people's math and makes sure that their estimates are online, that they've done what they're supposed to do because, no one wants to pay these penalties. And, ignorance is not bliss when it comes to that. They'll get you.
Yeah.
So we are always telling people, get ahead of it.
Well, Tim, we've heard talk, we've heard rumors, we've heard that we might not want to tax tips, or we might not want to tax Social Security, or that the current tax laws, which reduced taxes back in 2017, they might sunset or they might get extended. But we have to operate under the laws as they are today, right? None of those things are certainty. So we really need to look at where we are right now as kind of a golden opportunity to do this proactive tax planning.
Well, you know what taxes are today. I can tell you that. So why would you not get ahead of the Roth conversion thing? Most people that come to us, they've had a quote unquote advisor who just turned out to be a money manager. And they didn't advise them on when to pay taxes, when they should do conversions, that their Social Security could be taxed up to 85%. There's a lot of missing pieces that people don't realize. And then when they go back to that advisor and say, "Hey, Joe Blow from a big shop, why didn't you help me with that?" Well, we can't talk to you about that. Well, we can because we're number one, a certified financial planning practitioner firm, but we also have a CPA on staff, and you want to go one step further, we also have an estate attorney.
Well, again, ladies and gentlemen, if you would like to have those conversations, be proactive, make the most of your money, keep the most of it, be efficient with taxes, pick up the phone and give Tim Stearns, CFP, and TJ Stearns Inc. a call, 800-640-2256, 800-640-2256. You can also run your calculator, see your rough numbers online on the online retirement tax bill calculator, mvpcfp.com, mvpcfp.com. Or if you're one of the first 10 callers with at least $1 million saved for retirement, because some of these advanced strategies apply and work best for that kind of category of saver, then you can get a copy of Tim's book, Solving the Modern Retirement Riddle. So if you'd like that, again, the number 800-640-2256, 800-640-2256. Tim, whether we realize it or not, for the last generation, I mean, 3 to 4 decades, we have been taught to save in the method that creates the highest possible retirement tax bills possible, and in fact causes several additional complications, different whammies that hit us with. You mentioned the Social Security, but Medicare premiums and capital gains are also impacted by the way we've been taught to save and invest.
Exactly. And that's why I think, that's why we teach our workshops, taxes in your retirement, which can be Zoomed by most people. We also have a retirement class where we talk about all that. My big thing is to educate people so that they don't run into the different things that I've seen come in our doors, where people say, "Oh my gosh, my other advisor never forewarned me that, I'd be subject to Irma. I didn't even know what Irma was." We had one client joke, Hurricane Irma hit me in my pocketbook. I mean, true story. But now they're doing means testing basically when it comes to Medicare. And you're going to pay more because you were a saver than the guy who sits on a bar stool and lives Social Security check to Social Security check. That doesn't seem fair, but that's the way the world is working now. So, again, we want to be proactive with people. Give us a call.
800-640-2256 is that number. And Tim, don't we have to have longer term vision for retirement planning effectiveness as well? I mean, I know a lot of people right now are excited by the premise of a pro business environment and kind of unilateral control over the branches of government over what
Yep.
could be done, and the tax situation. Again, maybe the 2017 Tax Cuts and Jobs Act gets extended, but we have a new government, or a potential for a new government, every 2 years. And retirement in many cases is 30 years. We need to worry about the next 15 to 20 election cycles,
Right.
not just who's coming in office next month.
Right. And that's why we stay abreast of what's going on in Washington. But more importantly, our plans are dynamic. So as your life changes or the world around us changes like it did with when COVID hit, these are our clients are still, afloat and doing well and cutting down on their taxes every year when they do Roth conversions with us. We have weathered the storms with our clients, and my 30 years on the job have helped me see a lot of different things that I want to have help my clients avoid.
Tim, here in the U.S., there's been a lot of talk about everybody paying their fair share of taxes, which the government collects as we earn through our individual income or businesses, and it's important to understand that the tax system is progressive, meaning the more you earn, the more you pay, the more income that you have, the more assets you have built up, the larger the bill is potentially going to be. Another old saying, I feel like I'm throwing out a lot of old sayings, but more money, more problems, right?
Yep.
And maybe it's a quote, air quotes here for those listening on radio, a good problem to have. I hear it. Like I heard an analysis of the amount that Juan Soto is going to be paying in taxes on that huge salary deal that he just got. Nobody's going to feel bad for him because of the situation. Like it's a good problem to have, but I still hear the word problem in that, Tim.
Right. Right. So if you know that you're going to be paying these huge taxes, you need to learn how to avoid them. We're showing our clients different ways to shelter money. Besides the Roth conversions, there's some really great vehicles out there that you can shelter money, such as a QLAC, which is a qualified longevity annuity contract, that you could put away about $200,000 a year that you will not have to do required minimum distributions from. So that's one of the things we've had conversations with our clients about. There's a lot of different vehicles to try to shelter money, and that's important to know about.
And when we're earning income, Tim, those brackets within the standard deduction where we're not paying any taxes from the 10 to the 12, 22, all the way up to a 40% bracket. A lot of people don't actually know the effective tax rate that they pay or even how these progressive tax brackets really work. But you and your team there, you help people better understand that and manage um, to 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 manage the tax bill within those brackets as effectively as possible.
Right. I mean, we're going to play the brackets to make sure that we're filling up the lower brackets as best we can if we're doing a Roth conversion, or at least letting them know what their marginalized tax rate is. Most people just think it's a flat, oh, I'm in the 22% tax bracket. That's not how it works. It goes up in steps. So I think education is power, by being educated. My parents believed in that, and I still do with our clients. I don't want our clients thinking that we work with, smoke and mirrors. We're teaching them as much as they are learning from us.
Can you talk to us, though, for a minute, Tim, about what the difference between tax filing versus tax planning looks like? Like, how do I know what I'm getting?
Well, tax filing is basically being a history major. You look back at last year and you file the taxes based on whatever you did. Tax planning, which is getting ahead of it, is what we do. And that's by showing people if you stay this course, this is what you're going to be paying in taxes. If you do what we're recommending, you're going to save in taxes. And I think you know what the answer is as to which path they choose. They don't want to pay more taxes, especially the people that listen to our radio show. They are very cost conscious and they don't want to pay more than their fair share.
Are those two things sometimes in opposition, though, Tim, as far as like tax filing versus tax planning, looking back at last year versus looking at the years ahead, when somebody wants to pay the least amount possible? Is there some inherent conflict that is created there?
Sure, if they haven't been aware because their other advisor didn't tell them that they could do this, that, and the other thing to save in taxes, usually they get a little angry, and that's when they move their assets to us because we're showing them a better way to do things.
But it is pay me now or pay me later. So like a
Absolutely.
bigger bill today or last year might be the secret to paying less into the future.
That's correct. Take your medicine now so that you're going to be better in the future is one of the things that we earmark money for that on purpose so that if we're going to take the hit now, do it when these artificially low income rates are out there.
And again, Tim, we've got choice and options. We can control ultimately how we classify our money, which has its own respective tax results, right? You talk about these buckets where we can
Yep.
place our money. That is going to be a big part of the discussion in proactive tax planning.
Of course it will be. And with our CPA, we'll get them at a lower tax rate usually, unless they have something really obscure out there. But normally with the rank and file that we've had come in here from this radio show, we've helped a lot of people save a lot of money in taxes.
There are a lot of questions, I think a lot of confusion, Tim, about getting money into the tax-free bucket. And tax-free, I feel, is a little misnomer because there's some taxes that have to be paid in order to get money into the
Right?
tax-free bucket, right? But there's a lot of people who think that they can't get money in the tax-free bucket or are confused by it. Can you maybe shed some light on where the confusion lies and how people can take more advantage, contributions, conversions, and such?
Yeah, so most people think you can only put in, depending on your age, 7,000 or $7,500 into a Roth, and if I make too much, I can't do it. Well, that's not true. You can also do a Roth 401k, a Roth 403b. Those are the things out there that you can actually put some good money away. That's one of the ways. The other way would be to do a conversion. So you can take an IRA that you currently have and do that Roth conversion. And that does not matter what you make a year or not. under the current tax laws. And again, to your point earlier, we know what tax rates are now, so we need to take advantage of them because we don't know where they're going to go at the end after the end of this year.
But Tim, if I've got a $500,000 or $1 million IRA or 401k tax deferred account, I probably don't just want to blanket and
No.
in whole convert that whole thing, because that's going to have some unintended costs and consequences and bump us up in that progressive tax system. Plus, at a certain age, may have those double and triple, quadruple whammy compounding impacts.
Exactly, on Medicare and all the different things that you could have out there. So that's why we talk to people about nibbling on the tax bill, and I mean, every little bit helps, right? I mean, so that's why wouldn't you at least go through the exercise to see what it's going to save you in the future?
Tim, you've talked about the fact that your IRA is an IOU to the IRS, or a ticking tax time bomb.
Yep.
How do we departner ourselves from the IRS?
Well, that's a little bit of a hard one, but I mean, I would tell you that one of the ways you can do that is by using the Roth to your advantage. The Roth isn't guaranteed forever. So, I mean, maybe they're not going to be around down the road. I don't know what Congress is capable of, but I know today we are able to do Roth conversions under very low artificial rates. And that's why I would tell people, give us a call and let us run some numbers.
And efficient tax planning, of course, Tim, is for everyone.
Yep.
But specifically, there is a window of opportunity between 59 and a half and all the way up to 73. In fact, that window of opportunity, one of the good things here in recent political agendas, it's been extended. It's been opened just a little further in that window of opportunity.
Right. And don't forget, by 2033, it's going to go to 75 years old. I could see that being moved back down, but right now that's what we're dealing with. And again, we deal with what is today to get ahead for the future.
Well, taxes may be a pain. They may be a thorn in our side. Paying taxes does mean you made money. So a good problem to have. But it also does mean problem, right, Tim? And you help your clients and proactive planners address that issue and pay the least amount possible, both last year, if we can, but more importantly, into future years. And ladies and gentlemen, if that's been a missing part of the conversation, or if you want to make sure that it's not missing from your planning strategies, you need a blueprint. You need that specific protect and grow written retirement blueprint that Tim Stearns, CFP, and the team from TJ Stearns Inc. puts together for their clients. And they do make a fantastic offer. The opportunity of listening to this program is that you can take advantage and get that plan put together for you, your specific protect and grow plan. No cost, no obligation. All you need to do is pick up the phone, give a call, 800-640-2256. That's 800-640-2256. 800-640-2256. Tim, an important topic, I'm sure one that we'll talk about a few more times before tax filing deadline and the tax season really kick into full steam.
I look forward to it because there's a lot of things out there that people can learn to get ahead of it.
Get the plan in your hands for 2024, 2025, and all the years beyond to control those taxes, ladies and gentlemen. Call Tim Stearns, CFP. Get the Protect and Grow written retirement blueprint, 800-640-2256. Tim, always appreciate the time.
Thanks, Peter.
Tune into Chicagoland certified financial planner Tim Stearns' full radio program and visit tjstearns.com for many valuable resources, including other great episodes of Chicagoland Retirement. Be sure to subscribe.
Investment advisory services offered through Cornerstone Securities, LLC. The information presented on this program is provided for informational purposes only without warranty of accuracy, completeness, or suitability for particular purpose. This program is not intended to be and does not constitute financial, investment, legal, or tax advice. This information is general in nature, not specific enough to be construed as advice. You should not make any decision based on the information presented on this program without independent consultation with an appropriately licensed professional or competent advisor. Investment in securities or the market involves a potential risk for loss of principal. Trading, therefore, may not be suitable for all listeners. Annuity guarantees are based solely on the financial strength and claims-paying ability of the issuing company. Withdrawals of growth from annuities may be taxable as ordinary income in the year it is taken. Individuals should review contracts for specific details of the product's features and costs.